Hello, I'm Marvin Ringling. I'm a real estate broker here with Platinum Mortgage. I've been in the business in Southern California for over 40 years, and I'm coming here to put together a DVD on a program for helping you with doing your short sale and loan modification on your home. I have brought in Nick Fernandez here as my assistant associate to explain it to you. Hello, Nick.
Hello, Marvin. How are you doing? I'm here to help you. Let's provide this valuable information to the homeowners.
Some of the programs that we're going to bring across to you today have to do with the forbearance and loan modification, the bankruptcy, and deed in lieu of foreclosure, and the short sale.
All right.
Okay, Nick, are you going to explain to us how the forbearance is followed through on?
Yeah, forbearance is an alternative for a homeowner that has experimented some unexpected events and he fall behind on his mortgage payments. Probably he missed 2-3 payments. Now he's back on track. Now he's able to make his mortgage payments again, and he's concerned about how he's going to resolve the past due amounts. What he needs to do, he needs to get in contact with his lender, and his lender will probably add these amounts to the principal. Of course, his payment will increase a little bit, but it won't be that much since it is a 30-year term. Other options is that probably he will get a repayment plan. Bank will be more than willing to help him. We can also help that homeowner in our office. But again, this is an option for a homeowner that is able to afford his mortgage payment.
Now, Nick, you want to bring up and go into the loan modification program?
Well, yeah, very popular alternative. Many homeowners are looking into this possibility of the loan modification. What a loan modification is pretty much when the homeowner gets in touch with the bank, they start negotiating to modify some terms of the loan. Unfortunately, this process is a process that requires a lot of documentation from the homeowner. It's not like in the past that most of the programs were stated income or stated assets. Now the bank will require evidence and proof of income, assets, tax returns, etc. It's a lot of documentation that needs to be sent to the bank. It's a long process. The bank may take probably 4, 5, 6 months to give a response. Chances to get the loan modification approved are very, very slim. I can share with you some statistics that will graphic how tough it is. Washington Post just published some figures from Bank of America, in which out of 1,600 applications, only one was approved, and that was not even...
That's a pretty small number.
It is. It is really bad. As I said, it's very hard, and it's getting harder and harder to get a loan modification approved.
And then sometimes do they do a reduce the principal?
Not really. Most likely what the bank will modify on the modification is the interest rate. Sometimes what they will do, they will lower the interest rate, or they will give the homeowner a lower starting rate. So for a few years, it's like a temporary solution. What is bad is that whatever the homeowner is behind on his payments will be added to the principal, making his situation even worse because his principal will be now higher than what it was before. And as I said, they will just lower the interest rate for a few years in order to reduce the payments, but it's not a solution at all. Now, we have seen some reduction in principals, but again, going to numbers, as I told you before, 1 out of 1,600 gets his modification approved. Now, of these people that gets the modification approved, only 1 out of 300 gets the reduction in the principal. So if we time these numbers, we come to the result that one person out of 480,000 people will get his loan modification modified with a reduction in the principal.
Not too good a record.
Not at all. Chances are very, very slim, and it's not looking like a solution. It's most likely looking for a waste of time, waste of money. And the worst, another thing that is also very bad is that when the homeowner is trying to do a loan modification, he thinks that in the time that is being reviewed, his property doesn't have any risk to go into foreclosure, which is not true. The bank keeps on moving forward with the foreclosure, trying to target the trustee sale date. And sometimes when the trustee sale date is already scheduled, the loan modification negotiator gets the news 1 or 2 days before that the modification has been declined. And then the homeowner is pushed by these people to file bankruptcy. That is like the only option to stop the trustee sale, which is true. The trustee sale will be stopped, but again, it's just like a temporary solution. Probably it will stop for 2 months, but down the road, he's going to lose the property, time, and he's going to lose money because he already spent money in the loan modification. And of course, to file the bankruptcy, he's going to spend also another considerable amount of money.
Pretty tough program.
Not recommendable nowadays. Most people are very disappointed with these modifications. I've seen modifications myself in which the modification has been ridiculous. I can even show you proof of that. They modified the payment in $40, things like that. I mean, it's really, really disappointing.
Nick, do you want to lead us on into the deed in lieu of foreclosure and give us a good explanation on that?
Sure. A deed in lieu of foreclosure is when the homeowner takes the decision to give back the property to the bank. The bank will require some conditions. Most likely the bank will require that the property must be listed at least 90 days in the market. So pretty much this situation is happening with rural areas where the houses are very slow movement and the properties don't get any offer. But in most situations when the property will be put in the market, we will get some offer. So this is an option for, as I said, houses that have very slow movement or areas where there are not many buyers attracted into these properties.
Do the banks accept the keys on that very easily?
Yeah, they'll do it. They have no other option. It's not the best option for them, but something that is really important to emphasize to the homeowners is that even though the bank takes the house from you, it doesn't release you from the responsibility of the difference that the bank lent you to buy the property and the amount that the bank will sell it for. There is going to be a loss, and the bank may come after you for that loss. That's something that you need to take in consideration. Do not assume that just because you gave the house back to the bank and the bank took it, it's going to give you a full release. That may not be the case, and it's very, very important to take this into consideration.
At this time, Nick, I suppose we can go into the short sale program, which is our real program, what we're really going to do here for the people.
Yeah, very, very good option for a homeowner to move on with his life and get away of these problems. The short sale is pretty much a win-win situation. It's an option in which the bank accepts that the homeowner will put the property for sale on the market. The property will sell for less than the amount owned, but the bank can still approve it. Now, the good thing about this short sale is that by participating in this short sale, the homeowner can get a full release from the bank on the debt. What that means is that, let's say we have a homeowner that got a $300,000 loan to buy a house 2 years ago. Right now, he participates in the short sale. He cannot pay the house, and the house is sold at $200,000. There is a $100,000 loss from the bank. The bank will issue a letter in which the bank is releasing the homeowner of any responsibility on that debt, on that difference. Does that
homeowner have any tax liability with that?
No, that's another thing. First, we need to see that the debt that the homeowner has with the bank is going to have a full release. The bank is going to even give up its right to execute any future judgment in order to collect these funds. So that's one thing. Another thing is what you just mentioned. For accounting purposes, the bank is going to send a 1099 to the homeowner for the difference. Now, that doesn't mean that the homeowner had that income. You know, he never got a penny of that money, but he will just get the 1099. Now, for some people, that will have tax consequences. Fortunately, we have the Debt Relief Act, Mortgage Debt Relief Act, that the government published this in 2007, in which what it means is that the homeowner is not going to pay any tax on that amount. That is valid, and next year, supposedly expiring on 2012, we don't know if it's going to be extended, but at this time it is in full effect, and that is something great for you homeowners. If you participate in a short sale, as I said, we can negotiate a short sale for you. We can get you a full release of your debt, so the bank will not come after you for any difference. And as you said, Marvin, according to that Mortgage Debt Relief Act, you won't have any tax consequences on that either.
How is this going to affect their credit for the future?
Oh, that's another aspect that is very important to consider. Unfortunately, some homeowners don't see the difference between a foreclosure or a deed in lieu of foreclosure, or, as they say, letting the house go with a short sale. The difference is this: when you participate in a short sale and you get the short sale successful, I mean, you are not only gonna stay longer in the property, because the short sale is a process that will take approximately 3 to 6 months.